Welcome back, folks. In this video, I want to talk a little about timing your entries on the 1 minute chart, and I'm going to be going through some of the trades that I've journaled that I haven't discussed in terms of the entry. Okay, so let's first look at this one here. Okay, that was done early in the week. Okay, let's jump to the charts, and on a 1 minute time frame, that's basically this trade here, and I'll zoom in a moment. But I want to talk about this trade. Firstly, I want you to notice the time here. Okay, this was a trade that was done at 2 a.m. Typically for the London session, I do like to get trade entries at 2:30 a.m. But this one was a quite easy 2 a.m. entry. So what I see is I always look for a dump, right? I'm always looking for the dump for the pump, okay, or the pump for the dump, okay? So I have spoken about that. Go and look at the video I did recently. I'll do more videos around that. We'll talk a bit more about that in today's video as well. But on this day, in that manipulation, okay, I see the market come down in this zigzag pattern, right? I look for that in the manipulation hour, which is typically the first hour of the session, okay, which is why I trade the second hour or halfway into the second hour, which would be 2:30 a.m. for London, okay. Now, if I expand this and look at this a bit more closely, you can see how the market's coming down, okay, and look at the time, right? It's in that time before we get to 2:30, so in that first hour of the London session, right? And at 2:15, which is the second 50-minute candle, okay, is when we get this move up. Now, I've entered after I've seen this consolidation, okay, so we've been coming down. I start to see consolidation. I look on a 15-minute chart to see why have we stopped here, okay? That's important. I want to know, is it now going to reverse? Let's look at the time of entry for this trade. It was 2 minutes past 2 a.m., okay, so it's probably somewhere around here, okay, as the market's coming to this level here, second hour, and pump up. Now, on a 15-minute chart, this is that dump, okay? This is that dump that we're talking about, okay? You can see right at 2 a.m., it kind of stops, okay, and then look at that 2:15 to 2:30 candle. This candle starts at 2:15. That's that second 15-minute candle, okay. We get that wick, and then we start to move up, and I look onto the left and I see that the 15-minute fair value gap that this is reaching into, okay. So immediately I know that's what it's reaching for. I'm looking now at the chart on a 1 minute, and I see we've started to consolidate. I think I may have entered just as it's coming down into that fair value gap, okay, but essentially we then start to get our move back up. Now your take profits will be at these equal highs, which we eventually get. I think I took this off at this fair value gap from memory, okay, around that 208, okay. Yeah, so you can see there around that 208, okay. So in this video, I just want to talk about these entries. We've already gone through the trades in previous videos, but I haven't spoken about entries specifically. Now on the same day, 2:30 also, because I like to trade 2:30. So if I open this up the same day, but just in that 2:30 to 2:45 candle, okay, this is the down move into that 15-minute fair value gap, and I'll see that we get a move up, push down into this up candle, right? Because that is where mitigation needs to occur. They've bought to sell, they go through there. I've spoken about this many times on any time frames, okay. I've given you examples of this exact pattern on 4 hourly charts. They're coming back down and mitigating, okay, which is that candle right there, that up candle, and that's what's happening in that 2:30 a.m. candle, okay. So I've added to my positions another 5 lot, and this time I take that exit above those highs, okay. So that entry also that's my preferred time of entry, 2:30 a.m. So for London, you want to see the first hour prior to that 2 a.m. A manipulation, okay, because that's going to be the dump for the pump. You want to see that, okay, that's what I like to see, and your entries should be somewhere around. You should expect repricing, okay, in the opposite direction. So if it's a dump, then the opposite direction means it's a pump. You want to look for your entries around the 2:30 a.m. mark, okay. Here I've taken a 2 a.m. entry, and as the market's come down, push down, okay, this is that 2:30 to 2:45 candle. I've also taken an entry on a 5-minute chart, okay, and it looks like here the market moves in the new hour, and that's expected, okay. The market moves at that new hour or halfway into the new hour, okay. So let's look at a couple more examples of 1 minute entries, okay, and this is an important one, okay. So let's look at this one here, which was done in Asia. Let's talk about that. So let's see if I can find this one. There we go. Okay, I think this is down here. Let me find this one. Okay, so this was an Asia session trade again. This was an Asia session trade. I like to trade Asia, London, and the New York market. For Asia session, the time again, Asia starts at 8 p.m. and so the second hour will be 9 p.m. and the second half of that second hour will be 9:30 p.m. Okay, so this was a 9:30 p.m. trade. Let's first just look at a couple of things before I talk about the entry. Okay, bias is important. Okay, so again, we see the dump, right? The dump for the pump. Okay, we're always looking for that dump for the pump. Okay, now I had already identified objective of these equal highs. Okay, so that's my bias to the upside, and I had posted that prior to the entry. So that was the on 1 minute chart, those equal highs there at 2416. Okay, So my bias was to the long side. Okay. Now this was the trade. Okay. This was the entry in Asia. Okay. 9:30 entry. Okay. Let's now walk through on a 1 minute chart how I entered. So the first thing I want you to notice, let's go to a 15-minute chart and let's find that particular day. It's right here, actually, right there. Let me take off all these lines. So I want you to notice there's the equal highs that I'm targeting that I have already seen and documented as my overall target. Okay. And this is where I entered. We'll talk about that in a moment. But the best entry is going to be when you take out a previous session low. Okay. For me, Asia is the start of the day. Okay. So for me, this is actually Wednesday morning in Sydney. It's overnight session for New York. Okay. For me, that is the previous daily low. So high probability trades are when we take out a daily low and reject. Okay. So that made this particular trade very high probability. Now, you know that when I set my targets, I'm not looking for the ultimate target that I have set, right? So this is my ultimate target, but on this trade, I was only targeting these highs, okay? Because I'm expecting the market to come back and stop hunt. So I want to take my profit at key level. This is a high. I've spoken about this already. This is a high just below a fair value gap, and that trade was taken off at that level. I have multiple positions on. We'll talk about that. So let's talk about the entry first. Go back to a 1 minute chart. So at the point where I've taken that entry, I've noticed that we've taken out the previous daily low. Let's just turn on these lines so you can see. So that's the previous daily low, okay? And this is Asia coming in to that. Okay, this is all happening right on in that 9:30 p.m. candle, right? So again, on 1 minute chart, we have that dump, right, prior to the entry. Let's have a look at this. So again, we have this dump. This is all prior to 9:30, okay? This is a very, very repeatable and higher probability pattern, okay? You have the dump, okay? The previous daily low is above this midpoint, okay? So we've come and taken that, and look at these three candles. Whenever I see three candles, they take out liquidity on any time frame, okay? I watch that very closely. So we've had these three candles, then I want to see immediate rejection with displacement, okay? So immediate rejection with displacement back down into the gap, okay? And I've already entered, okay? I think I would have entered a few minutes before we've got down here, just expecting, as soon as I've got this move up, I've already entered. That move there is 9.25. Let's have a look at the entry. This one, there is 9.25, okay? So as soon as I've seen these three candles, I know that once we get engulfment, I know we're in, okay? We're going to come back. I'm already anticipating this to be, these three down candles to be the bullish order block. So I've taken my long right on that candle. It's gone up, come back down, and you can see it's tried to scare existing long holders by coming back in, okay? So that one, as I said, the target for that particular trade was this high here, okay, which we've gone into. So there's two lots of trades for that position. Okay, so there was this original lot, 5 lot that I've taken out at the fair value gap on a 5 minute chart, okay? And then I had another 5 lot on the same trade, okay, down here, up to the original target that I had. Again, that's a safe exit, looking for these highs, but not waiting for all of that, okay? Because I know from experience, they're going to want to push back down again, okay? And that's what we did, right? The following day, we can show you on a 15-minute chart. So there's my entry 15-minute Asia session up to, let's just make this bigger, okay, up to that level, right? That's the high that was made, but I've taken out this inside of this fair value gap, okay? That's the trade there, okay, that one there, right? So it's up that high inside that fair value gap, okay? But we can see on this 15-minute chart, after that, we've come back down, okay? And we don't take out these lows, so this is a stop hunt. You can see it's crawling down, okay? Even this is crawling up, right? Crawling down. So this is essentially a move up to come back down, but I've taken that long, okay? And I also mentioned on a previous video that this here, when we were down here, okay, I said this here would be liquidity for the move up to take out these equal highs, which were my high time frame objectives, okay? Posted prior to entering these Asia longs, that liquidity was already identified, okay? So I had that on the chart already, 2416, okay? So we can see on that 15-minute chart, after it exited, it's a good exit because it went down. Eventually we got that level there, those equal highs, which is 2416. You can see the price there on the right-hand side of the screen, okay? Now let's talk about a couple more trades, okay? 1 minute entries. So we've done that one. Let's talk about this news trade, okay? Now, this is an interesting trade. I've already done a video on this, so go watch the video where I traded the news. But I want to show you in this video how you could have entered after the news, right? A better entry than I did, right? A better entry than I got using the exact same approach that I'm talking to you in this video, right? That I'm talking to you about in this video. So let's go to this particular trade. So I traded this on the news announcement, okay? But I had to accept a risk that the market could come down, and it did come down, and my risk tolerance was around 100 pips. And I had mentioned the levels that I'm going to be accumulating if it did come down, okay? That's a separate video, go watch that. I'm not going to talk about that in this video. Here, I want to show you how you could have traded that, move up, okay, and got a better entry than what I did, okay? Let me first find where that trade is, okay? Let me find it on the chart. Okay, so this trade is this particular trade. Okay, now I traded this off the news, as I said, but I'm going to show you the better entry, okay, after the news. So after the elevated risk has been reduced, okay. So the news announcement is at 8:30, okay, on this day, and we get that, right, it moves down, and now we're going down, okay, this is all after the news now. So in that first hour and a half, basically that first from 8:30 to 9 a.m., we are going down. So again, we have that dump for the pump, right? Now, I've always said that the best time to trade gold in the New York session is going to be that 9:30 a.m. Okay, that's either going to make the low or the high. You want to look for, if you're bullish, you want to look for your bullish signatures. Okay, now we get down here and we get this beautiful 3-bar reversal. Okay, that I've spoken about, which you have this wick in the middle, you have this down candle, and then an engulfment. Okay, now here, this is high probability because you've got 2 up candles. Okay, followed by the 3 down candles. Okay, again, 3 down candles, right? Taking out all the liquidity on the left. I'm going to talk about where this is coming into in a moment because it's coming into a discount PDRA on a 4-hourly chart. Now, look at the time here. This is inside of that 9:15 to 9:30 candle. We completely engulfed that entire structure, right? Similar to the Asia long that I showed you, right? The first example. These patterns repeat, coming back down into the order block, you've got this displacement, okay? Coming back into these order blocks. Again, it's all happening inside of that 9:15, 9:30 candle, okay? So that price point there, I think I then just waited for a bit of reaction and entered my final lot at that price point at 2407. So if we go back, you'll see there'll be an entry here at 2406. So there was that entry there. You can see the time there in that 9:15 to 9:30 candle, okay? So that was the final lot that I added. I was adding to this as it was going down in accordance with my trade plan. Go and watch the video about this particular trade, okay? But here I'm teaching you that you don't have to trade the news. I said that at the start of that video. I said you don't have to trade the news, but I chose to trade the news because you don't always get to move back to a level you want on those news announcements. So I accepted the risk that we may go down before going up, but you don't have to. And I don't recommend anybody. In fact, I discourage people from trading news announcements because that is a elevated risk environment, okay? You can wait and follow simple methods of the dump for the pump. We're getting a dump prior to the 9:30. This is the confirmation. This is all I look for when I'm looking for my 1-minute entries, right? 3 down candles into a key level. Have to have a bullish bias, okay? This dump confirms that. The reversal confirms that. This has to be at a key level, okay? On the Asia trade, I showed that it was coming down into a previous daily low. On this trade, it was coming down into a 4-hourly, right? A 4-hourly bullish order block. So this here on the same day is 2 down candles. This is the 4-hourly bullish order block, okay? We're up here somewhere, and we're coming down into that, okay? So the price here, look at the high. I'll just move this over. So that down candle for early chart, look at the high there. The high is 2403.48. Okay, let's just call it 2403.50, and the open is 2400. So anywhere within that high to that open, or even within this candle, is going to be sensitive area, okay? So the high there is 2403.50. Let's go back to the 1-minute chart. What's the low in this candle? The low here, let's over here, look on up here, that's what the prices are. The low here is 2403.49. So look at that. Within 1 pipette, we've come down into that 4-hourly fair value gap. So that's a key discount price, okay, where we've reversed from, again, 3 candles down, up with displacement down into the order block, but also coming back down into these up candles to mitigate this buy to sell, right? So they've come back down to do 2 things: grab the orders from this order block, okay, and mitigate these 2 up candles. High probability trade, okay? And you don't have to guess where it's going. Just trade back up to the dump, right? These are equal highs. Again, trade back up to the dump. If you're entering here around that 9:30, right, when you're coming back down into this zone, to there, 80 pips, walk away, you're done, okay? So I just wanted to walk you through how I look for entries on 1 minute, but you need to have that directional bias and an understanding of the higher time frame PDRAs that are going to provide you that support where it's going to bounce up from, or the resistance if you're looking for shorts, okay? Let's also look at one example from last night's trading, okay? I've already journaled that entry, so go have a look at that on the Twitter profile. But again, it all comes down to time, okay? So if we look at what's going on, where's 9:30? You just got to find 9:30, okay? So here's a 9:30 bar. You can see we have, what's going on? Do we have I'm bullish, my bias is bullish. Do I have a dump for the pump? No, I've actually got a pump for the dump, okay? How do I know this is a pump for the dump? I didn't take this trade, nor would I. If I'm bullish, I don't take the short setups. But we've got a pump this time. Here's 9:30. You get your 3 up candles, which is your bearish order block, with displacement down, okay? And then push back up into fair value gap into these bearish order blocks. Again, to me, that's all irrelevant. If I'm going long, I'm waiting for 9:30 because I'm bullish. As I said on my update, where's my, there, this one. So I'm bullish. This is all before 9:30, okay? I'm looking for higher prices. Then I'm not going to take any shorts, but I'm looking for a long setup. So here, again, same pattern. Look at the same pattern, just different time. 9:30 this time dumps down, okay? So it just means that the trade could be at the end of that 9:30, 9:45 time, okay? Or at 10 a.m., okay? Is that the hour or the halfway point of that hour, okay? But the key thing here is if you're bullish and you see the market's going up, and you get to the 9:30, well then that's not your setup, okay? You've got to identify when it's not your setup. You wait, right? You wait and you watch. And it could be that you don't get a setup, okay? But often you will at that time. But what happens here? The 9:30, 9:45 candle dumps into a key zone that's a 4-hourly order block, okay? So if we go to a 4-hourly chart, that is a 4-hourly fair value gap, sorry, not an order block. We're coming into, again, discount pricing, okay? We're coming down into a 4-hourly fair value gap marked with this blue box here, okay? You can see the prices are around that 2420. So this is coming down into that 2421, okay, at the high end of that fair value gap marked by this box, okay? That's the high end of that fair value gap. But the clue here is there's your dump. As soon as you get down into that zone, you consolidation, you can wait for 10 a.m. to start. Okay, so at 10 a.m., you get a push back down into a bullish signature fair value gap for high prices. But no problem, once you get down here, see consolidation, I don't mind doing a long here just like I did at 2 a.m. in a previous example, because I know that's the dump I'm waiting for. We've come into a key support zone. I'm bullish. I'm waiting for this dump. And I've got higher targets, but there's nothing wrong with just taking the high there. That's over 100 pips, okay? On my longs, I was looking for 24.40. I think we got to 24.36 something. So that was a high. I've already taken those profits. I still have some on. I'll hold over the weekend, but that's that trade there. Okay, up to 24.36 into this fair value gap. Okay, but I was looking for 24.40, even higher. I think we'll get that on Monday. Okay, so time's important. Sometimes you've got to look at what's going on at 9:30. 9:30 should be down here, right? But it's not. It's up here, and we don't have a dump for the pump. That means it's not ready yet. So you wait. Okay, now this is at the end of that 9:30 candle. This is 9:45. So the next 15-minute candle, okay, the 9:45 to 10 a.m. candle is where it's setting up. But the fact that we've dumped down into a key discount PDRA, that's where you want to be looking for repricing higher. You can wait for time and wait for your bullish signature right there, 10 a.m. Okay, we go through, make a fair value gap. That's your bullish signature. You can wait and enter there. So that's okay too. But if you're looking at the price action, you are comfortable with the price action, then that's also a right time and price to expect repricing higher. Okay, so I hope the video is useful. I will now talk with you in a future video.